Hi, this is Dave, along with Napoleon and Pistachio, my two Boston Terriers. We're kind of sitting here in the office and just looking at how the markets closed on Friday. I didn't trade the close of the day on Friday, but I did trade a little bit earlier in the day. And we had some volatility, because of the fiscal cliff talks in the United States. So I just want to start off by wishing everybody a happy and safe holiday season. Merry Christmas, Happy New Year. I hope you get to spend some time with your family and friends, and I hope you have a fantastic holiday. So before we get into the some technical analysis of the markets, I just wanted to point out my team and I are working on the Active Traders and Investors Conference. This should actually say 2013. We are in the process of just making some minor changes to the website, but this website is substantially complete. There will be some some changes going forward here and there, but this is an event that my team and I are putting on in support of. Let me just clear this off. In support of Sick Kids Foundation. So if you go to the website here, www.activetradersconference.com, you'll see here that we have this event. It's taking place on Saturday, February the 2nd, 2013 at the Burlington Convention Center. It is sort of in the heart of the GTA. Very good access from, the Niagara region and from Toronto all the way to Toronto. We're kind of central to all, the entire horseshoe area. So we've got some good speakers lined up here. We'll be revising this list and adding a few more speakers on here, but we have some good speakers lined up with some interesting topics. I encourage you to take a look at the website and click on register to attend in person. If you can't attend in person, then you might want to consider getting the recording. If you click on, for example, register to attend, and then you can, there's a write-up about the event and about the registration process. Now, it is an educational fundraiser in support of Sick Kids Foundation. So what that means is that for everybody who signs up, you're not actually paying to attend the event. You're making a donation to Sick Kids Foundation, and every dollar of your donation goes directly to Sick Kids Foundation and to Rally for Kids with Cancer. So we're not actually making any money on this event. It is strictly an educational fundraiser, and it's for a fantastic cause. So we decided to kind of put this on in order to help the cause and focus on something that that we do and that we know, which is active trading and investing. So we're trying to get the community together, the active trading and investing community together, in order to help out this cause. So if you click on, for example, register to attend, and you click on the join button. Now this is accessible from a number of different locations. Register to attend, click on the join button. There is an opt-in process so that being the event organizer, we can capture your information for the actual event. And then once that happens, we'll send you a donation link so that you can actually donate directly to the Sick Kids Foundation. That's a secure link that resides on their website, on the Sick Kids Foundation website. We have nothing to do with that. That is strictly their website for the payment details. Now, one of the benefits of doing this, aside from learning a lot about investing and active trading at the event, at the conference itself, you're giving to a good cause, and your donation is essentially, you'll receive a tax receipt for it, which goes directly against the income tax that you pay. So you're looking at, for example, a $99 donation. Well, you're going to get a good portion of that back against your taxes. So it's a win-win situation for everyone, and we hope that you'll consider attending, and it will help you to improve both your confidence and your knowledge base with active trading and investing. So I'll be sending out some announcements to the meetup groups and to our other marketing channels in order to get the community on board with this. We're looking forward to this event, and we're looking forward to to helping out going forward. So have a great holiday, and we'll get now into the technical analysis aspect of this video. Okay, with that said, let's take a look at the Dow futures, at the market, starting with the Dow futures on the daily chart. Now I've got a number of different charts here. We've had a contract rollover. So what we're looking at here, you've got a 5-minute chart. Here you have a 15-minute chart. Here you have a 60-minute chart, and here you have a, oh, that's hard to write with a mouse here. Here you have a daily chart. So essentially, these are charts that I look at throughout the day. I'm a big proponent of multi-time frame analysis. So what I'm looking at here is I focus, from a bigger picture on the weekly and daily charts, mostly the daily charts for the video, just for ease of analysis. But throughout the day, when I'm taking trades or when I'm assessing and analyzing the markets, I'm looking at, what are the 5-minute, 15, 60, and daily chart doing? Are they all moving in tandem? Is there, is one choppy, one trending? It gives you a better idea of where the pressures lie throughout the day. So essentially, at what we had here, let me just clear this off. And the reason why I mention this is because if you look at the close of Friday and you look at, let's say I expand out this 5-minute chart, the 5-minute chart throughout the end of the day was trending higher. You can see the moving averages were rolling higher, and you can see that, my trending indicator rolled to the high side. It was negative in this area, and then, it rolled to the high side, and we were trending higher, into the close, and we closed, fairly close to these highs. We didn't actually touch those highs, but we closed, at the highs of the intraday session. So that's important to note going into a Friday. The major move, if we look at the 15-minute, it was essentially the same. 60-minute, the same, but you can see the 60-minute chart. The 60-minute chart is just turning, and you can see we had overnight. This was really the big news here. If you look at the 60-minute chart, this 1-minute bar, this is like a 200-point move. This is like 13,000, let's say 240. Actually, let's see exactly what it is. So let me just draw a line here. So here's the high of the bar. So you've got from 13,233 all the way to 12,961. That's over a 200-point move. That's about 250 points in 1 hour. Now, this was a result of the fiscal cliff talks, and this happened in the after hours because the future market, the futures market trades almost 24 hours a day. So this was in the overnight session, which you wouldn't have seen in stocks. You would have just seen it as a gap down in the morning in stocks and in the stock indexes. Not futures. So essentially what you had here was a fiscal cliff talks caused this kind of volatility. Market didn't like what they were talking about, and there was a big sell-off. But what you can see here is it came off the lows, and then it started to sort of push higher. So when I see something like this, what essentially I'm looking for, let's say on a 60-minute chart, is I want to see, here was the high. This was the high in play before this low came in, that spike low. So if I grab some fibs here, and I grab the high and I grab the low, what I want to see is here, usually what you're going to get is at least a 50% retracement of that move, if it's going to reverse. Well, even if it's not going to reverse. But you can see here we closed above the 61.8. So there's kind of the line in the sand right there at around 13,153. That's kind of the line in the sand between, is this a real move? Is it gonna fail this and then roll back over to the low side, or is it just going to clear this 61.8% sort of ceiling and start pushing back to the high side? So this was a news-driven event, kind of a shakeout, and we just closed almost right at this fib line in the sand. But you can see here we tested it, and we came off of that level pretty hard when we tested it here. and then we came back and we closed above it to close out the day on Friday. To me, that's fairly significant, and I'll be looking to see if we're going to hold this level going into Monday, and see if we're going to come back and potentially retest some highs or something like that. So I mean, we are in holiday we're in holiday season here, and I'm not really expecting too much out of the market, but you've got the potential to rally into the beginning of January at least. So if we look at the daily chart, which really tells the story, what you can see happen here is we were pushing back above this trend line that we were talking about in last week's video, and then once we pushed above that trend line, I was looking for essentially this to happen. We found support, push off, and then I was looking to potentially play the air in between this high here and these highs back in here. But this was news-driven volatility, and we basically spiked down all the way into this swing point in and around here. But you can see that the uptrend is still intact. You've still you're net positive on the trending indicator. The stochastics, the stochastics are still net essentially, I believe, bullish, although you did have this kind of M pattern, sell pattern in here. But the expectation is, that we'll probably push back to the high side. We kind of did that. The MACD is still net positive, and you can see the volume is fairly low based on because we're going into the holidays. A lot of traders are probably taking time off. So essentially what you had though is we kind of formed a new trend line here, and we spiked below the 21 exponential moving average, but now we closed way off of these highs. We are, or way off of the lows rather. So the low was down in here around 12,960. I thought it made sense to kind of mark that and to establish a new trend line at that level, which is more of really a more sustainable trend line if you really think about it, because we were mentioning that this trend line here was not like the kind of trend line we had going back in that area when we had a nice kind of 45-degree angle of ascent. So this is more the kind of 45-degree angle of ascent that you would want to see in a sustainable uptrend, right? No market is going to just go straight up, so you're going to get this kind of stair-stepping action. So that being said, we closed way off of the lows here. That news-driven spike low, we closed way off of those lows. So what we really need to see here, in my opinion, what I'm going to be looking for is to see us push above these highs, push back up and kind of push back above, some of these levels right in around, well, let's mark that level. I think it's around 12,300. So that's what I'm going to be looking for to see if we're going to really have continuation to the high side. 13,265. We really need to clear 13,305, to really get something going to the upside in order to really expect a retest of these highs. And that's kind of what I'm looking for. Now, if we fail this level here, this is kind of right now, this is kind of my line in the sand between long and short. As long as we stay above this level, I think we have the potential to retest the highs. If we break this level, then we need to really reassess. In my opinion, I'll be reassessing the market and seeing if we're going to, if we're going to get some continuation down to the downside. This trend line here really needs to be broken in order to get anything going. We started getting something going. Now we really need to get above this level here. So I hope that makes sense. It was kind of a long explanation for what I'm looking for, going into the new year. And if we're going to retest these highs, the question will be, okay, if we retest the highs, are we actually going to break through the highs and go to new intermediate highs? So that's kind of what I'm looking at, and these are sort of the decision point levels that I'm looking at this point in time. There's really nothing to do, in and around here. This is kind of the DZ, the dead zone right now, and the decision points are really getting above, this level or getting below, this level. this is a pretty big range of nothing at this point in time, in my opinion. I do think that we are more bullish than bearish, though, in my opinion. So hope that helps. Let's take a look at the S&P futures at ES. So the S&P futures kind of are the same sort of story here. They look much like the Dow. I'm just trying to see if anything else looks, different. No, not really. I mean, you've kind of established this new, this sort of new trend line in and around there. Same kind of idea as the Dow. 1430 is really your key level there in the Dow to get above, and then you really need to clear these highs in and around there to get anything going for a retest of the the intermediate high somewhere around 14, probably 1440. Okay, so you've got that kind of challenge area between 1430 and 1440, somewhere in and around there. Let's take a look at the NASDAQ then at NQ. So the NASDAQ's a little bit weaker, I believe, than the other stock indices. You've sort of got this this trend line developing here. Let's extend this to the right, and let's see here. Yeah, so you've kind of got the same story going here. You're still putting in a series of higher highs and higher lows, and you're net bullish on most of the indications. So, we really need to get above that trend line in there, and above some of these key fib line in the sand levels. The 618 is at 2,725-ish. So we really need to get above this 618 level from this high to this low in order to really get anything going for a retest of, some of these higher levels. So I hope that makes sense. Let's take a look at the dollar index. Let's look at some key currencies here. Before we do, let's look at the transports. Is this right? Transports. Okay, so here's something that I find interesting. We have, and I'm looking at this fresh. I haven't been looking at, I look at these charts on the weekly recap. That's one of the reasons why I do these videos, in order to keep on top of my research so that I don't really, I don't lose sight of the big picture here. So if you look at this, let's use blue now. If you look at this, this key range in the Dow transports, this was kind of, just a big box plate, and we broke above it right here. So the transports are starting to look, more bullish than bearish. We're outside of this range. So, if the stock indices push higher, especially the Dow, and the transports continue to confirm, that is a net positive for, for assessing and determining maybe this is a real move, if that happens. So keep an eye on the transports and see if they're going to move in lockstep with the Dow. You can see that throughout the previous rally, we were just stuck in this huge range. Okay, now you do have some challenge points up here for the Dow. Let me just throw a line here. You've got that price resistance right in around there based on, that swing point high. So we really need to get above that level. Let's just mark this on the chart. Red. Great. Okay. So that's essentially what we have. Now let's look at some key currencies. Let's look at the dollar index, DXY. So the dollar index seems to be flirting with, we failed the 80 level. We came down to this key 79 level support, and now we're coming off of that level. I don't know if this was, sometimes when you break out of a wedge pattern, you get kind of the fake and break, and then it will reverse direction. So, we did have a move outside of this wedge to the downside, but you can see we're just coming right back up and testing it. So the challenge point will really be this 21 exponential moving average, which is coming in around, just under 80. So you're still really contained within, this support zone. This seems to be some major support. Stochastics are looking a little bit overdone. MACD looks bearish. Trending indicator looks bearish, but this is a long-term support level, as you can see here. I've had it marked on the chart for a while, and on that basis, we really need to decisively break this 79 level in order for the dollar index to the US dollar index to really come crashing down. And if it did, I would probably be looking at, some of these levels to be tested. But at this point in time, it seems like it's holding, 70, 76, 77, somewhere in and around there. So I'm looking at these levels to hold, and I actually hope they do hold. I'd hate to see the dollar index, fall off a cliff, but stranger things have happened. So let's look at its the dollar index's charting nemesis, and I just say that because the euro moves opposite the dollar index. So let's just take a look at the euro, and we've got this key $1.30 level. The euro's actually starting to look quite bullish. So we had, let me just change this to green. We have this key $1.30 level that we've been flirting with, back and forth in and around this range. You can see it's kind of a big box play, but the $1.30 level is really the key level. We've been talking about it for weeks and weeks and weeks. And if you look at the fact that we're above this trend line, let me just extend this trend line going forward and match up those points. Now we're trending higher. We're putting in a series of higher highs, higher lows. We've got a higher high here, higher low, higher high. We need to establish a higher low somewhere, either in and around these moving averages, or maybe a pullback all the way back down, either to this $1.30 level or where it meets, somewhere in this trend line. So, but if you look at the stochastics, are buried to the downside, and we're at the 8-period exponential moving average, and we're just above this breakout area of resistance that we had marked here, this swing point of $1.3189 or thereabouts. So, when you see a situation like this where you've pulled back to, to retest the breakout point at a key moving average with your stochastic buried to the low side, the fast stochastic, this could be a potential area of support. Although you've got support all the way down to $1.30, which is, that's 189 ticks, which is a huge range. But, you want to see if this area is going to hold and push back off, and, see if we're going to hold this level and go higher in the euro. If we do that, that bodes not so well for the dollar index. So let's take a look at some of the lower time frame charts, actually, and see what we have here. Let's see here. You've got the 5-minute chart went sort of bullish, but I do notice a divergence here. I notice a negative divergence where, you had a higher high here, and then you have a lower high here in the momentum of my trending indicator. That's a negative divergence. So I don't really like that. 60-minute chart is still net negative, although you're losing momentum. 15-minute chart's trading above its 21-period exponential moving average. It looks like it's starting to trend higher, and the trending indicator starting to, potentially roll over to the high side. So, these are some pretty crucial levels to be at. The dollar index is holding that key support, and this is testing this breakout point. But, you could come all the way back down to some of these levels. So I'm not really quite clear on what to do there, except just to note, the action, and to note those clear levels, or those key levels rather, these key levels that it's kind of trading around. So it's funny how the market sort of comes back and tests these levels. It closed right at that breakout point. That's not a new level. That's a level we had on the chart going, back several weeks at least. So that's all I have for this week. I apologize. The video's a little bit long. I hope everybody has a fantastic holiday. We have some great things coming up in the new year. Actually, I'll just link you to that quickly. So we already talked about the Active Traders Conference. If you go to the CSTA's website, csta.org, for those who know, I've taken over running the Oakville chapter group, and we meet on the second Wednesday of each month. So coming up, if you come to the main page at csta.org, we have this fantastic event coming up. You can click on the upcoming events, Oakville chapter, and we have guest speaker Zia Jasani. He is the business partner of Larry Berman. You may have heard of Larry Berman. He's quite well known, in the Canadian technical analysis circles as a top technical analyst. And he's been around a long time, past president of the CSTA. So his business partner, Zia Jasani, very nice fellow, has agreed to come in and speak with us. He's from the Independent Investor Institute. He'll be speaking on active trading, specifically stacking the odds in your favor. And we're going to expect to have a full 2-hour packed session, and we'll have lots of time to look at live analytics and to identify high risk reward trades. So it should be a fantastic meeting. Really looking forward to it, especially for those who are more active traders and investors. Will probably be able to glean quite a bit from the presentation. Hope to see you all out there. It's going to take place on the second Wednesday of January. So we're going to hit the ground running in January and, get things rolling for the new year, the 9th of January. This takes place at the Queen Elizabeth Park in Oakville. And, just click on register to register for the event. If you're not a CSTA member, the first meeting is free. If you are a CSTA member, then the meeting is free as well. Now, to join the CSTA is only $125 a year, and there are a lot of benefits to being a member. So if you want to know more about it, feel free to email me at, specifically for the CSTA, you can email me, dave@csta.org. So dave@csta.org. Be happy to tell you more about it. You can also look at the website. So I'm going to wrap this video up. I realize it's long. Happy holidays. And we'll look forward to seeing you in the new year. So be well.